It's that time of year again. It's tax time. I'm Tara Ryan, and I'm going to talk for just a couple of minutes about the tax implications of home ownership. Tax deductions that's frankly one of the benefits of owning a home. There are special tax breaks available only to homeowners. For example, a large chunk of transaction closing costs are tax deductible. There's a Form 1098 which will be sent to you by your lender every year, and it's going to detail for you how much mortgage interest you have paid and also whether there were other points and fees that would be tax deductible. Do allow a little more time if this is your first time owning a home. Allow a little more time for completing your tax return because you're going to have more to do because you'll have more deductions. Mortgage interest. Up to 100% of the interest you pay on your mortgage during the life of the loan is tax deductible. What counts as mortgage interest? Well, clearly, interest you pay on a mortgage to buy your home. A second mortgage will qualify as well. A line of credit or a home equity loan under certain circumstances. In order for this to apply to you, it does need to be either on mortgages taken out before October 13th, 1987. That's going to not apply to many of you. For mortgages taken out after that date in 1987. Basically, mortgages used to build, buy, or improve your main home or second home up to $1 million. Home equity loans up to $100,000 on either the main or second home. So the limitation is up to $1 million, and if it's a second home equity line, up to $100,000. Points are also deductible. So when you pay points on a mortgage, you're basically paying more closing costs to get a lower interest rate. So the IRS really treats that as interest and therefore tax deductible. A point basically means 1% of the purchase price of the home. And your settlement statement will tell you how much you paid in points, if any. For a purchase, whatever points you paid are fully deductible in the year that you paid them. That can be a big deal. For a refinance, you still get the benefit, but it is over the life of the loan. Property tax is also deductible. Yes, you're required to pay property taxes, and it can be a significant expenditure, but do know that it is deductible. Using a mortgage escrow account, as many of you have done, allows you to pay your taxes monthly instead of writing out a big check once a year or twice a year. But the timing is critical. If you don't have an escrow account and you're paying taxes yourself, do be aware that you do need to pay the tax in the year that you're taking the deduction. So for those of you with due dates near the end of the year, do watch out for the timing. MI, private mortgage insurance, PMI, all of those things are referring to mortgage insurance. Premiums for mortgage insurance are deductible. The Tax Relief and Healthcare Act of 2006 was the first time that mortgage insurance became deductible, and that was actually extended as part of the Taxpayer Relief Act of 2012. This is only for mortgages taken out after January 1, 2007, and it is only for as long as they decide to continue extending this deduction. However, it does apply through 2013, so anything that you're paying in mortgage insurance on loans taken out after that 2007 date would apply. The amount that you can claim will be shown on that Form 1098 that your lender will send you. There are a few requirements. Some of them are very particular. The biggest one is it does phase out based on income. So it's only for adjusted gross income less than $100,000. Over $100,000, the deduction is going to phase out very quickly. You may also be able to apply this on a second home, and so you'll want to talk to your tax advisor about that for sure. And I have to say, consult with a tax advisor about all of this advice. This is not meant to be tax advice, but just to point out some of the key factors you need to be aware of with regards to your home and tax deductions. To summarize, the tax benefits of homeownership can be significant. I want you to make sure you keep great records about the purchase of your home, any improvements you make on your home going forward. Pay attention to when you make your property tax payments to make sure that they'll fall in the year that you want to take the deductions. And as always, if you have any questions, please reach out. We're happy to help.